Most people talk about index universal life insurance in extremes. It's either the greatest wealth tool ever created, or it's this terrible product that nobody should ever get. And both of these takes are wrong. An IUL is not good or bad by default. It is a tool. And like any tool, it only works when it's used for the right job by the right person at the right time. I'm going to walk you through the real advantages of an IUL, not hype, not numbers, just the benefits that actually show up when an IUL is structured properly and used with intention. First, let's talk about flexible funding across income levels. An IUL is not just reserved for the ultra wealthy or corporations. It can work at different funding levels. Now, if your goal is to use an IUL to maximize cash growth, at the bare minimum, you want to do your age times 10 each month, but the spectrum of how much you can fund this is really quite variable, right? Whether it's $6,000 a year, $20,000 a year, or $100K a year, all of those are very doable, just as long as the person is insurable and the policy is designed correctly. The higher the funding level, of course, the more efficient the policy is, but the entry point is flexible depending on what the use case is. What this means is this isn't about income level, it's more about the design and also about consistency and also alignment with the financial goals. Next benefit, protection from market losses. Cash value inside an IUL is not directly invested in the stock market. And what that means is because there's no negative years because of stocks, there's no time needed to recover from market crashes. When the market is negative, your cash value does not go backwards because of the market. Next benefit, tax advantage growth when used properly. Growth inside an IUL is tax-free as long as the funds stay in the policy, and if the funds are accessed, it's tax-free if accessed correctly through policy loans. If funds are pulled from policy through loans, it's not counted as income tax. There are no capital gains taxes, and there are no required distributions, as in you're not going to be forced to take funds out of your policy at whatever point, no matter how old you are and no matter how much your funds grow to. However, this only works when the policy is structured properly and the policy owner accesses these funds with discipline. When done right, an IUL creates tax flexibility that most traditional accounts simply cannot offer. Next benefit, converts savings into retirement income. An IUL isn't just about building a balance. When structured properly and when also leveraging the right insurance carriers, it can be used for supplemental retirement income. It can reduce reliance on taxable accounts, and you can pull income without pushing yourself into a higher tax bracket. For people who expect taxes to be higher in the future, this becomes a very valuable benefit. Next benefit, earn while you spend. This might be the most misunderstood benefits in an IUL. When you borrow against your cash value, your money continues earning interest inside the policy while you use your borrowed dollars elsewhere, right? Now, this is not free money. It's capital being used effectively and multiplying your dollars. Used intentionally, it allows your dollars to work in multiple places at the same time, so you can just multiply your funds faster. Next benefit, predictable access to capital. If you want to access policy loans through your IUL, they do not require credit checks. They do not require income verification. They don't require the market to be doing well. Essentially, you ask for your funds and they are wired to whichever account you want them to in the next 2 to 3 days, right? Access is based on what is available in your policy itself without any extra qualifications. And this predictability matters most when traditional lending tightens and the market becomes unstable. You know that in your policy, you always have access to cash because you have built out your personal bank. Benefit number 7, asset protection. In many states, cash value inside life insurance has strong creditor protection. What that means is that it can be harder to seize than your brokerage assets or your bank accounts, and it may provide legal protection to your assets and your funds for many professionals and business owners that are more likely to face litigation. This varies from state to state, but where it's available, listen, who's going to say no to protecting their money from lawsuits? Benefit number 8, tax-efficient wealth transfer. Life insurance death benefits, which is essentially like money that is left behind when you pass away from life insurance, is income tax free to beneficiaries in general. And it's paid quickly and it's not tied to any market conditions at the time of death, right? This makes an IUL both a legacy tool and a financial stabilizer for families. Benefit number 9 can function as a personal banking system. When used intentionally, an IUL can act as a private capital system, right? You fund it, you control access, and you decide how and when money is used. It doesn't replace banks, but it can reduce your dependence on them for major financial decisions. It's always nice to have an option that doesn't require you to go to a bank, ask for funding, and kind of have to jump through hoops to do what you want to get done. But here's the part that most people skip. Everything you just heard can be true and still lead to a bad outcome because none of these benefits happen automatically. They only show up when a policy is actually designed correctly. And this is where most people get burned. They understand the benefits but never learn the downsides, trade-offs, and set up mistakes that quietly destroy your performance. And if you want to make a smart decision, you have to see the other side of this. In this video, I'm breaking down the real cons of an IUL, not scare tactics, but actual real reasons why the strategy failed for so many people. So if you're considering an IUL, I will see you there.